and it went back down and retested this trend line, and that resistance became support. Now it's gone up and it has broken this resistance here and the triple top by almost 9%. So this is very significant because of the way professional traders trade. We're going to get to that in a second, but first I want to take a look at what's happening in the world. So we've got China selling Treasury and U.S. agency debt rises to record levels. China just dumped the largest amount of U.S. Treasuries and agency debt in history. Probably fine. You know, we used to call this the nuclear option. Whenever tensions build between the United States and China, they've got so many treasuries that they can absolutely collapse our economy by just dumping them all on the market at the same time. However, global trade prevents war. This is very important. China does not want to ruin our economy because we are their biggest customer. Their economy does well when our economy is doing well. So as long as we can keep on buying stuff from them, their economy goes along just fine. They're in a trade surplus. We're printing we're typing the world's reserve currency into existence, and we get to buy stuff with it. And so that is causing us to have this consistent trade deficit that goes on for decade after decade. We're able to do that because we can pay our debts with the currency we create. But this is a bad sign, and when it comes to the global trade barriers and everything breaking down and the death of the global dollar standard.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Good evening and welcome to our Economy Express news. I'm Eric. Our top story tonight. The silver market has confirmed a major breakout. Mike Maloney reports that a significant 9% move past a crucial resistance line signals a confirmed breakout. This development is pivotal as it has caught the attention of professional traders. In technical terms, the silver market experienced a triple top formation, where prices hit a resistance line 3 times before retreating. This resistance line has now transformed into a support level, bolstering trader confidence. Professional traders often look for a 3% move past strong resistance to validate a breakout. The nearly 9% surge in silver is a clear green light for many to re-enter the market, indicating robust bullish sentiment. Shifting to global economic factors, China is making waves by selling U.S. Treasury and agency debt at record levels. This move is strategically significant amid rising economic tensions between the United States and China. In trade news, new tariffs imposed by the U.S. on Chinese goods, ranging from steel and aluminum to semiconductors and solar panels, are noteworthy. These tariffs could potentially slow China's economic growth and escalate global trade tensions. On the topic of taxes, increased capital gains taxes in both the U.S. and Canada are raising concerns. These higher taxes could deter investment and potentially lead to a downturn in the stock market, as they significantly cut into investment returns. In domestic economic policy, the U.S. government's excessive spending is under scrutiny, with a staggering $1 trillion being spent every 100 days. This spending spree is contributing to rising inflation and economic instability. During his presentation, Mike Maloney also took a moment to promote his company, goldsilver.com. He emphasized its reputation, competitive prices, and fast delivery, encouraging viewers to consider investing in precious metals. Turning our attention to Cuba, the country's financial system is on the brink of collapse. This monumental story highlights the severe consequences of monetary mismanagement and excessive currency creation. Lastly, silver demand continues to outpace supply, leading to 4 consecutive years of deficits. This supply-demand imbalance is driving silver prices higher, supporting a bullish outlook for the metal. While gold has reached an all-time high, silver's current potential is garnering increased interest from traders and investors alike. Bitcoin, although not specifically discussed in this report, remains an influential player in the broader financial system. That's all for our economic update tonight. Thank you for joining us. I'm Eric, and we'll see you next time.
Like this, the more that we become completely independent and sever all of our ties with the rest of the world, the easier it is for World War III to break out and for your life to be threatened. Moving on, what could pop the bubbles? All the bubbles, they're out there right now. China home prices. This is the biggest fall. This is close to 1% in just April. Just April. And so this is a consistent downtrend now going on for a few years, except for just 2 months of tiny little gains in home prices. The rest of it is all in the negative. And that is their largest single consumer investment sector, is real estate. Capital gains hikes. I covered this a couple of videos ago, that raising capital gains to 44.6% could be one of the things that helps to pop the stock market bubble, because the higher the tax is that you have to pay on any gains, first of all, you will have to beat inflation by, your investments have to go up 44.6% before you've gotten to a break-even point, when it comes to inflation. So, not to be outdone, Trudeau. Canadians will now pay 66% capital gains on all their profits over $250,000. So you're talking about the government up there. They used to take half of everything. Now, and they left you half. Now they take 2/3 of everything and they leave you 1/3. Now, what are you going to do when it comes to savings and investment versus instant gratification? You've got delayed gratification by saving and investing. You're putting off what you could have today for someday way in the future. You want your investments to pay off and grow, and you want greater purchasing power. But now they're going to take 2/3 of that purchasing power, that gain that you've made. So people are a lot more likely to spend it now versus investing it into companies and having it grow. So investing it into the stock market, they're more likely to spend it as we, countries around the world try to increase capital gains. So moving on, the proposed Canadian capital gain tax rates, it used to be just a flat 50, and then anything above 250,000 is now 2/3. And so this is a disaster. So if you had invested back 17 years ago at as the real estate bubble was popping and we were going into the global financial crisis of 2008, there's been about a 50% inflation since then, according to the BLS, or the BS I like to call it, because there really isn't any labor in here. This is just the Bureau of Statistics, or the BS. We know that this is the CP lie. And but if you have that 50% gain, and then they take 2/3 of it, you owe them $33. But that 50% gain gets you back to break even on purchasing power. You're only catching up to inflation by having that 50% gain. You should be able to deduct inflation from all capital gains, and from, as inflation goes up, you have to get paid more. So, people ask for raises and so on, and your pay increases, but that pushes you into a higher tax bracket. And so it's just impossible to get ahead when there's big inflation. So moving on. Hi, I just wanted to take a moment, thank you for subscribing, and mention that if you'd like to help our channel, please consider my company, goldsilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making goldsilver.com your dealer. And now, back to the video. The BLS, I said that the CPI is the CP lie. Well, what they did at the end of March, they stopped reporting. The last publication date is March of 2024. Tomatoes that they've been tracking for years and years and years. And they actually would go into stores and take a survey and come up with all this. Tomatoes, shortening in vegetable oil, and coffee. Coffee is no longer in the CPI. So how do you deal with prices going up? Well, you just stop reporting on it. That's how to make yourself look good. Out of control inflation, it now takes at least 178,000, I'm going to round, for a family of 4 to live comfortably. Moving on again. Taxes in America are out of control. So this is a distillery, and this guy down here is explaining that for every gallon of whiskey they make, they pay the government $13.50 per barrel. That comes to $894 per barrel. And so this is what it costs every day. This is a week, and so they pay $1 billion in taxes a year. And this is when they're making it, so they're paying it in advance. It's not on profits. And so it takes 4 to 7 years to age that whiskey, put it in a bottle, and sell it to a distributor. And that is when they finally recoup that currency. He's calling it money. If we were using money, we wouldn't have all of these problems. So households earning $300,000 plus per year are the biggest beneficiaries of the new student debt cancellation plan. This is a study by Pennsylvania Wharton University that finds that the average is that these households that make more than $300,000 per year are going to see $25,500 of debt relief on the average. Now, this next tweet, in case you were wondering who's going to benefit from the new student debt forgiveness, it's the rich again. From my buddy in wealth management, I have a client where both spouses are doctors. They have a combined $650,000 in student loans that will be forgiven next year. The husband just inherited $4 million, and the government is going to give them $650,000 in student loan debt relief. And where does that come from? Well, the government doesn't create anything. They have to take it from somebody before they can give it to somebody else.